Hi students, good evening. Yesterday we have discussed about the income statement. What was the purpose of the income statement? The income statement is just to know that how much the business has a profit or the loss. Okay, what we are doing, we are preparing the financial statements. And why we are preparing the financial statement? Because we want to know at the year end that how much is the profit, how much is the loss, how much we have to pay, how much we have to receive, what is the total sale, what is the total purchases, what is the increase or decrease in the capital. So that's why the financial statements are prepared. So today we will discuss the second statement, that is called what? The statement of financial position. Okay, just as a simply the format one, what we have to do, we have to write the name of the company. So whatsoever is the name of the business or the name of the company, we have to write. Then we have to write the name of the statement. So the statement is statement of financial position. Then we have to write the date, that on which date we are preparing this financial statement. Okay. Again, just for the clarity purpose, that this is what, this is for the trading business, we are preparing the financial statement, the trading business financial statement, and this is again for the single owner, mean for the sole proprietor, not for the partnerships, not for the companies, because the format is a little bit different for the companies and for the partnership. So we are considering the very basic one, very simple one, the statement of financial position for the single owner and for the trading businesses. Now in that we have mainly three sections, you can say, or the three factors that we have to consider. The first one is what is the concept of the asset. Okay. The second thing that we have is the capital, and the third one is the concept of the liability. I hope you remember the basic accounting equation that we have, that the assets should be equal to liabilities and the capital. So the capital is what? The owner investment, that how much the owner has invested in the business, that is a simple capital. Then what is the liability? Anything the business has to pay, so that is the liability or the payable of the business. It may be a bank loan or from the friend or any other amount to the suppliers, so that will be payable. So the capital is the owner investment, the liability is the amount which the business has to pay. So if we total that, it should be equal to the assets. So asset is what? Asset is simply anything which has an economic value, or what we say the monetary value, and it is controlled or used by the business. So that is called the asset. So now we will divide the asset into the two different sections or two different parts. The first one is what? Is the non-current asset, and the second one is the current asset. Again, as I'm saying, this is just for the basic financial statement, the financial position, and for the single owner and very, you can say, simple type of the business, the trading business, because there are other sections also as per the international accounting standards. We will discuss that one in the later sections. So we are just considering there are two type of assets, the non-current assets and the current asset. So what is the difference between the current asset and the non-current asset? We have to focus just on the two things. One thing is what that is important, that is the life. The life of the thing that we are owning or what we are controlling, what is the life of that thing? Okay, the life of that asset or the life of that asset that we are using. Okay, the second thing is the cash, or what we say near to cash or cash convertibility. So the two things we have to consider. Okay, if the life of that asset is more than 1 year, so that is called as non-current asset. And the other thing, if it is convertible to cash and it is taking more than 1 year, again it will be considered as the non-current asset. But if the life is less than 1 year, or it is easily convertible to cash within the 1 year or within the one financial period, financial year, so then it will be considered as the current assets. So if it is easily convertible to the cash, and the second thing, if it is life less than 1 year, then it will be considered as current asset. But if it is not easy to convert into the cash, or if the life of that thing the what you are using is more than 1 year, it will be considered as what? As the non-current asset. So we are focusing first on the non-current asset. The first asset that we are writing is the land. Let's say the value of the land is 60,000. Now, from where we are getting this value 60,000? What is the source? Okay, I hope you remember the basic concepts that how we are getting these values, and if you are not remembering, so we will just focus on that. So first of all, when there is a transaction, so we write that transaction in the journal. It is recorded as the entry, like a debit and credit entry is there. Then we are posting it into the ledger, and from the posting of the ledger, we are preparing the trial balance, and from the trial balance, we are preparing the income statement, and the final statement is the statement of financial position. So all these values, the 60,000 value we are getting from where? From the trial balance. So any balance or any amount that we are getting here is from where? We are getting it from the trial balance, and in the trial balance values we are getting from the ledgers or the accounts, and in the ledger and accounts from where we are getting the values? From the transactions in the form of the debit and credit, means from the journals. So now the land is 60,000. The next thing is what? Is the building. Now the value of the building is 70,000, but here there is a small difference, the small change is there. What? That is the accumulated depreciation. In the previous lectures, we have discussed in detail about the depreciation, that what is the depreciation, what is the accumulated depreciation. So you can refer back to those lectures, or simply this building has, let's say, 20 years or 30 years of the life, and it is used for 2, 5, 10, any number of the years. So it is depreciated. So depreciated by how much? By 20,000. So the complete calculation method of the depreciation in the earlier videos you can see. So it is depreciated with 20,000. So the net value, or what we say, the net book value of that asset is how much? That is the 50,000. So here we have three things in that one. So first one, this is the cost. Okay, this is what? This is the accumulated depreciation, and this one is what? This is the book value, or what we say, the net book value of the asset. So when the asset, this building was purchased, the value was 70,000. In the last 2, 5, 10, how many years it is used? So it is depreciated by 20,000. So now its net book value is 50,000. In the same way, what we have a furniture and fixture. Furniture and fixture was purchased for 30,000, depreciated up to now for 10,000, maybe 2 years, 3 years, 4 years. And now its net book value is how much? That is 20,000. The next thing that we have, the vehicles, 40,000 cost, then 20,000 it is depreciated up to now. So accumulated depreciation is 20,000. So now the net book value for that one is also 20,000. So we have a land, but there is no depreciation for the land, because the life of the land we cannot determine. It is infinite, or we can say the life of the land is, you can say, for the long term, and we cannot calculate that one. So only building, furniture, vehicles, or any other non-current asset, the fixed asset, that will be depreciated other than the land. So we have a land, we have a net book value of the building, the net book value of the furniture, the vehicles net book value. So if we total it, the total non-current assets, or we call it also the fixed asset. So that is how much? That is 150,000. So the total of non-current asset is 150,000. So these are the non-current assets. There may be other possibilities, that so many other things are in the non-current asset. It may be a computer, it may be some machine, it may be some equipment, it may be some tools, or any other asset that is purchased and used by the company for more than 1 year, which has a life. So that will be considered as the non-current asset. So we can just write some of the other examples. For example, it can be machine, okay, it can be equipment, okay, it can be any tools, okay, or it can be any other asset which has a life of more than 1 year. Even the computers are there, it can be from the equipment also. So any computers, the hard computers means in the hard disk, or any, you can say the systems are there. So all these security cameras or any other equipment, so all these will be considered in the non-current asset. Now we come to the current asset. Current asset again, where the convertibility into the cash is very easy, or the useful life of that thing is less than 1 year, or we are using it for the resale purposes, so that is normally a current asset. And in the current asset, first of all, we have a cash and the bank. So any amount that we have available in the cash, in the hard cash form, so that will be the current asset. Then any amount that is deposited into the bank, okay, for the safety purposes, or nowadays, because we know most of the transaction is a requirement that you have to pay through the banks or receive through the bank, so you need a bank account, the business need a bank account, so that cash account and the bank account. So this is how much, 15,000. This is the first current asset. The second thing that we have is what is the account receivable or the debtors. So this is what, this is the control account. Why we'll call it a control account? Because the business has maybe 10 customers, 20 customers, 100 customers from whom they have to receive the money. So they have sold the goods to them on the credit basis and they have to receive the money from them. So the control account means we will not write the name of every person individually, or the every customer individually here, like 100 customers are there in the statement of financial position. We will just total that one as a control account. So the total amount is how much? That is almost 14,000. So they have a cash of 15,000 and the account receivable balance, the total balance is 14,000. The next one is what is the inventory or the closing stock. So what is inventory or the closing stock? We are purchasing the goods for the reselling purposes. Now at the end of the year, let's say on the 31st of December 2020, they have some stock or goods available which are still not sold, or there may be possibility which is not still used for the reselling purposes. So that amount of 16,000, so that is the closing stock or the closing inventory. So at the end of the year, what they have to do? They have to count that inventory, that how much is the inventory that is left, which is not sold, which will be used in the next year as the opening stock. So that closing stock is 16,000. So this is what? This is also the current asset, because we know this amount will be convertible to cash very easily. You have inventory, you will sell it. You may receive a cash, or it will be converted into the account receivable. Again, the account receivable after 2 months, 3 months, or according to the credit terms, it will be converted into the cash. So that's why here we have all the things which are easily convertible into the cash account. So that's why we call it what? As the current asset. And the last one is the prepaid expenses. Okay, in the previous videos, again, we have discussed the concept of the prepaid expenses. This is like an adjustment, that any amount of the expenses you paid in advance, so that is the asset or the current asset of the business. For example, you may have paid the rent of next, for example, 1 year. Out of that 1 year, 2 or 3 months are falling in this year, and the remaining amount for the next year. So that amount which is still you have paid but still not utilized or received the services, so that will be considered as the prepaid expenses. So that is 5,000. So if we total it, the total of this amount is almost 50,000. The total of these 4 items means the total of the current asset is 50,000. The total of the non-current asset is 150,000. So if we get the total means the total of the non-current asset and the total of the current asset. So that is how much? That is almost 200,000. So 200,000 is the total asset. So asset side is complete. So we have a non-current or the fixed asset, and then we have a current assets, or which are easily convertible to the cash, and the total of the current asset is almost 50,000. So 50,000 current asset, 150,000 non-current assets. So the total assets will be 200,000.